As the founder or owner of a successful business, you have to make, in many cases, dozens of decisions daily or weekly that have significant ramifications on your revenues, profits, and employee and stakeholder well-being. Over time, whether it's been through additional education or outside resources, you've probably developed a means to codify or organize your impulses and talents to take the form of processes for making those decisions. In other words, you do something strategic to navigate competition, economic up and downturns, capital and legal issues, employee challenges, and new opportunities. You don't just hope for the best. In fact, you already know implicitly or explicitly that hope is not a strategy. So when it comes time to monetize your biggest asset, your business, forgetting or ignoring that maxim could be disastrous. And yet, we see it far too often when successful entrepreneurs move towards a capital event. Here's a few quick tips to make sure you avoid this mistake yourself. 1, don't just poll your networking group or a couple of people at your club to find the right advisor to look at options for selling your company. Take an additional step or two. Educate yourself about the process and reach beyond a limited geography or friend and business network to find real expertise, whether it be an ESOP consultant, investment banker, M&A attorney, or other transaction advisor. 2, don't be Pennywise and pound foolish. Using your tax or small business CPA or an inexperienced exit planner or business broker to sell your company might seem like a great way to keep costs lower and put more money in your pocket. But in our experience and observation, you're dividing a much smaller pie by giving up more abundant options and potentially missing terms and legal issues that could have profound risk management and wealth preservation implications for you after the sale. 3, don't argue with the market. If experienced transactional professionals give you a range evaluation for your company, and you're not inclined to sell at even the upper end of that range, don't keep searching till you find someone who will promise a better number. Take a step back, get guidance on building more value or finding an alternative solution that meets your why in selling, and set a new course. Importantly, don't answer shop. You might find a less scrupulous advisor who will want to take a fee to tell you what you want to hear, then engage you in such a way that you're stuck with them for 12 to 24 months, even if you're unhappy with them in week 1. Great transactional professionals are busy right now, so if they're open to building a longer-term relationship by giving you advice you might not want to hear, consider that a sign of integrity and factor it into your decision. The market gets to decide on value, but you get to decide on timing.